China's central bank makes the biggest injection into the economy since the pandemic. But why now? Stay tuned to find out more. Chinese officials have been working to reduce the level of debt which is in the Chinese property market. But this has come at a cost. It's been a real squeeze on economic growth. So the central bank have sought to try and reverse some of this and put in quite a large stimulus across two aspects, across lending, but also across the housing sector as well. So let's look at some of the detail. In terms of lending, they plan to lower the interest rate on short-term lending, so 7-day repo lending, by 0.2%, on medium-term lending by 0.3%, and the loan prime rate, which is the rate in which banks used to lend to customers, by 0.2 to 0.25%. The amount the banks are required to hold in reserves is also expected to come down by 0.5% to 9.5%. So that's quite a material reduction in terms of the level of reserves required, and it can actually incentivise and encourage further lending into the economy. So in aggregate, total benefit of that injection is expected to be around $140 billion US. So it's quite a material injection which we're seeing here. And for housing, we've seen a number of developments. Mortgage costs are expected to come down by 0.5%, and actually the amount in which is required for the minimum down payment on second homes is coming down from 25 to 15%. So again, some quite material moves, and coming at an important point in time where the Chinese economy is slowing. It's fallen behind its 5% target in which it's set, and we're also seeing a reduction in terms of rates across the developed market as well, particularly in the US after the 0.5% interest rate cut, which we saw last week. And markets have digested this positively overnight. If we turn to the US, we also had an update on sentiment. So this is what management across corporate America are telling us. And there was some important developments there. If we look at the Purchasing Managers Index, what we're seeing across corporate America is in aggregate, things look pretty positive. Management are pretty optimistic about their future, which is kind of in line with what we're seeing of economic growth surveys at this point in time. If we look at the Atlanta Fed, who do a survey on real-time data, they're saying that actually in the third quarter of this year, the economy is expanding by around 2.9% on an annualized rate. So pretty healthy growth, which is coming through. But as we discussed last week, we know that's not in all sectors, and we know that's not in all states. So let's break that down. If we look at the aggregate number, it was 54.4. Anything above 50 is positive. That's coming in pretty much in line with what we saw in the previous month. But it's almost entirely coming from one area, and that single area is services, where we're seeing an expansion of 55.4, and this was marginally ahead of expectations. It's actually demonstrating that the quarter which we've seen has been the strongest which we've seen since early 2022. We're seeing a pickup in terms of exports. We're seeing that actually backlogs are starting to build, so there's real demand there in the pipe. But there is also a little bit of concern from businesses around employment, not wanting to replace any workers who are leaving. There's a little bit of concern seeping in there from the election. So a number of dynamics at play under the bonnet. And if we look at the manufacturing sector, that's still in contraction territory at 47. So anything below 50 is a contraction. And again, it's areas such as employment where we're seeing a softening. It's demand for new orders which are starting to cool off. So the interest rate cut, which we saw from the Federal Reserve of 0.5%, came at quite an important time in order to support all areas of the economy and maintain the positive economic growth in which we're seeing. And we saw a similar dynamic there out of Japan when they reported their PMI survey. In aggregate, pretty robust, but it's the services sector which is doing the legwork there. So a couple of important updates there from China, from the US, but also Japan as well. So thank you very much for tuning in, and we look forward to bringing you up to date tomorrow here on Morning Markets.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.